Well, hello and welcome to the first trading day of 2025. It's moving along really fast now right here in Lagos. Here's what's coming up in the next 55 minutes. Well, as the trading day moves along, we get an outlook for Nigeria's economy in 2025. Cocoa closed out 2024 outperforming major commodities with a 172% gain in 2024. The Central Bank of Egypt offering 80 billion Egyptian pounds in treasury bills today. It's great to have you join us. I'm Ladi Williams. Let's get the top stories now. See what's setting your trading agenda. See gold prices the inch higher today. Continue its momentum from 2024 while traders sought more clarity on U.S. Federal Reserve's interest rate trajectory. We see spot gold 0.39% up, $2,634.15 per ounce. U.S. gold futures a lower rise there, 0.2%. $2,646 per ounce. So let's get a check on oil now. We see oil prices nudge higher for the first trading day of 2025 as investors returning from holidays, they cautiously eyed a recovery in China's economy and fuel demand following a pledge by President Xi Jinping to promote growth. And yeah, talking about growth, big move up, 1.31% up to start the trading year, $74.13. That's for Brent crude. Even though we see, oil underperformed in 2024, down about 3%. So maybe this might be an indication of where oil prices might be going in 2025. $70.53 for WTI, but still maintaining the levels we're used to in 2024, but with big gains starting the year, 1.39%. That's for the U.S. grade. Now we see cocoa prices surge to unprecedented heights in 2024, outperforming all other major commodities. A confluence of factors, including severe weather conditions, crop failures in major producing nations like Ghana, Ivory Coast, and declining farmer incomes. That contributed to a significant supply shortage. Then we also had the bean disease outbreaks, floods, and inadequate farmer compensation. That further exacerbated the crisis. As a result, global cocoa stocks plummeted to their lowest levels in over a decade. Despite anticipated improvements in supply in 2025, the market remains vulnerable to weather-related disruptions, according to ING. The record-breaking price of nearly $13,000 per metric ton reached in December serves as a stark reminder of the fragility of the global cocoa market. Meanwhile, Mr. Bismarck Rouhani, CEO of Financial Derivatives Company, believes Nigeria should earn about $2.5 billion in 2025 from cocoa exports. He made the comments earlier on Business Morning today. Take a listen.
We've actually averaged at about 200,000 tons a year. We are the fifth largest cocoa producer. But the point is that the price of cocoa has gone up by over 400% from $2,000 a ton to almost $12,000 a ton. And therefore, technically speaking and theoretically and practically, we should be seeing a boom in activity in Ekiti, Osun, Oyo State, Ondo State, which is the epicenter of cocoa production. Again, it takes 5 years for a new tree to begin with a new genetically modified cocoa pods to actually begin to mature. But definitely this is a major thing for Nigeria. We used to earn about $600 million. Now, this year, we are expecting to get at least $2.5 billion. And this is significant and a major achievement in terms of reducing the dependence of the economy on oil and gas.
All right, now to our first conversation. We get an outlook for Nigeria's economy in 2025. We see the major culprits are still in focus, inflation, foreign exchange, and others. Joining us now is Dr. Patrick Jumede as the Head of Research, Sterling Asset Management and Trustees Limited, joining me right here in the studio. Happy New Year. Last time I saw you
was
last year.
2024.
Far.
Same year.
Not too far, right?
Not too far. Just 2 days backwards.
Right. And, a lot did play out in the ending, of 2024. We had the dirty December. We had diaspora Nigerians come in and, spend money. They had parties. They had fun. How do you think that's going to shape Q4 growth? That's for the economy. Seeing they all came back.
Yeah, so it's an interesting one. Somehow the depreciation of the exchange rate kind of favor, Nigerians in diaspora. As at last 2023 December, exchange rate was around, official exchange rate was around 800 or 900. But as at the end of this year, last year, sorry.
Right, last year.
It was around on the average for the month of December, 1555. So that gave a lot of opportunity for those Nigerians in diaspora.
So if you're coming in with like $100,
you see what that will
get more naira.
Yes. So what's going to be the implication? How's that going to shape Q4 results when they come out? Now, first we saw in terms of stability in the exchange rate in December. Yes, a lot of issues have been ascribed to why the exchange rate was stable in December. Some people have come up to say it's because the reserve has grown to about $40 billion US. Some have also come to say, okay, because of the introduction of the online platform by the CBN. But again, it is not tested though, but the money that these guys have brought into also have a reason as to why the exchange rate is stable. And we expect that stability to continue, even though some of them might be returning back in January.
And it's not hot money. What they bring in stays.
Of course, some of them will do some investment. Don't forget that.
Okay.
If you see what happened, nobody expected that the capital market was going to do about 37% year to date. But most analysts have said 35%, and it did 37%. Of course, we may not be able to attribute that huge difference to them, but somehow they would have brought in some money to their own people here in Nigeria that would have also done some form of investment. So if we do some form of empirical test to that, we'll be seeing those things play out, and all that. So in terms of exchange rate, we've seen that's playing some form of stability in the exchange rate. Now, in terms of inflation, yes, because of that, of course, usually in December, we usually have that high rate of inflation in December because of the festive period. But like I always say, it is the rate of growth that we look at when we are talking inflation. So we are saying that for December, we're expecting that inflation that is currently about 34.6 as at November, we might see it getting to, let's say, 35 in December. But on the average for the year, we might see inflation around 33%. But that will play a role. But in terms of GDP, of course, those impact of the Nigerians in diaspora that have come.
So for Q4,
would have yes.
What do you think we're seeing for GDP?
Of course, in our best case scenario, when we did our forecast, we saw GDP growing to about 3.7%. It's currently at 3.46%, the last Q3 GDP. So we are seeing it around 3.7%.
So that'll be a steady rise from Q2?
Yes, to Q3. But again, this is the rate of growth. If you look at how it grew between Q3 to Q4 2023, and the rate that we are forecasted that is going to grow now, it might not grow the way it grew between Q3 and Q4 2023. And the reason is because of some of this negative side effect of the policies of the exchange rate and the inflation that affected the economy, reduced investment, reduced purchasing powers of citizens and all that. So that's why. But again, that's a growth. But the growth again is going to show that before now, except for between 2000 and 2010, Nigeria had this kind of high growth rate, and there was a decline. And 2013, 2014, we had growth of about 5 and 6%. And now again, we are beginning to see us moving towards that growth. The last time we had a growth was around 2021, and we had growth of 3.6 something or 3.4 something or thereabout. So with this growth rate in Q4, we might see us getting past those growth rate that we had in 2021 and moving towards the kind of growth rate that we had in 2014. Right.
So, talking about the Naira, you did mention was quite stable, and the CBN governor did say from about June, we've seen stability, with the Naira. So going into, the first quarter, 2025, do you see that stability, continuing? And what do you think are the headwinds ahead for the Naira in this first quarter?
So first quarter, basically, in terms of exchange rate, we might be seeing, first, don't forget that a lot of companies would have stocked up for, Q4. And usually December, there's usually low production. And so we might not be seeing demand for raw materials or inputs in the production process for many of these companies. Then again, because of the depreciation of the exchange rate, like we said, from around 899 or 900 in December 2023 to 1555 in 2024, the demand for foreign education too has also dropped. So that will also put some form of stability in the exchange rate. And don't forget that the reserve is also coming up. And the introduction of the online trading platform by the CBN. So putting all that in place, I'm sure that speculators who are the ones that are actually driving the market at the moment will be very careful, because at any time the government can interfere in the market, and that can destabilize whatever plans they have. So we might see that stability, particularly in Q1, because of some of these reasons that I've mentioned.
Right, and we did see, the central bank did, sell to BDC operators in 2024.
Yeah.
Do you see that continuing in 2025?
Yeah, it's likely to continue, particularly at interval. Remember that this exchange rate usually depreciates, interval. If you look at between April, when we'll be doing our Easter celebration,
yeah,
and the Muslims will also be traveling for the Mecca period and all that. Those things are seasonal. It also put pressure on the FX. Then in June again, we'll see those kind of pressure again. Around October, and then December. So what we might see is that this periodical interference by the CBN in the FX market, we might see that. But overall, without those periodic increase in FX demand, we might see stability. But to make it fully stable, we might be seeing the CBN coming at those times to put some form of stability in the market.
Right, and I guess focus will soon start shifting to rates.
Yeah.
We'll have the first meeting for 2024. 2025.
Yes.
I'm still hung up in 2024. I need to get out of there.
No, please do.
So, what are we expecting for that first meeting? Talk to me, the MPC here in Nigeria and most other central banks in Africa.
So first in Nigeria, because it's our own, so we must talk about our own first. So first in Nigeria, what I see is to say that first you must look at what is happening, because like I always say, what determines the action of the CBN is what is playing out, the numbers that is playing out in terms of the exchange rate, in terms of inflation. And the CBN has identified the exchange rate depreciation as a key factor that is causing inflation in Nigeria. So what they want to do is to check what is happening to exchange rate. So if the exchange rate happens to be stable in the first quarter, and the government, particularly the federal government through its media chart, has said that they are going to increase food production. And increasing food production, they have said that they are going to increase security so that farmers can go back to their farm. So if exchange rate is stable and farmers can go back to their farm, and during June, July, that will be seeing some form of harvest period for farmers, we might see increased supply around that period. So we might be seeing that around the first CBN meeting that they hold, even though the calendar is not out yet, the first CBN that we might be seeing a hold. And hopefully, like what we did in our case when we were talking about the best case scenario, that by June, when harvest period will commence, we might be seeing maybe a rate cut around June. Maybe a rate cut for June, because the Fed, they've said maybe about 2 rate cuts in 2025 from a projected 4. So it seems like the other side, most developed economies, I don't think they're going that bullish with rate cuts into 2025. So a lot of economists are also trying to look at what the Trump administration is going to bring on board. And that is going to determine, again, what is going to play out. Don't forget that even though their inflation is coming down in those advanced economies, they are also seeing a second round of inflation because of core inflation that is going up in those countries. And if some of these predictions about what Trump is going to do come into reality, we might be seeing a second round of inflation coming from those advanced economies. So, and because of that, people will want to see the card play out before they will then decide on what to do. But if it comes out the way people have said, then it's going to affect us as well as a country.
Right. So we did see cocoa outperform most of the commodities, best asset class when it comes to most of those commodities. We've also seen some indexes. The stock market hit highs, never seen before. What's the play for 2025? What is that asset class that will either continue the outperformance from 2024 or maybe a laggard that might pop up in 2025?
Okay. So Interestingly, like you have rightly said, most of the index of the capital market did well. If you look at those 5 indexes as classified by the Nigerian Stock Exchange, that's the oil and gas, the banking sector, insurance sector, consumer goods, and industrial goods. But if you now want to compare it vis-a-vis what they did in 2023, you will see that oil and gas sector, the index did well. If you see banking, you see the index dropped. And why did it drop? I'm sure the reasons are obvious. But again, they were able to pick up.
Right.
By February this year, when the full year financial performance of some of these banks will come out, it will give another incentive as to whether investors are going to continue to buy bank stocks again. Because what they'll be looking at is to say, they've benefited from the high interest and they get high interest income because of the high interest of the monetary policy. But would they be able to sustain it? Are they not going to be having high non-performing loans? So by February, when their full year result comes out, investors will now begin to look at, let's see which of them that is doing well and begin to look at them. But if you look at the insurance sector did very well, compared to its value for 2023. Then if you go to 2 sectors that I feel might also be coming up to do very well in 2025 is the consumer goods sector and the industrial goods sector. Most of these sectors suffered the exchange rate and inflation issues that we've been talking about since 2023. But again, because of this form of stability that we're going to be seeing in 2025, we might be seeing some of them now, coming up from wherever they are and picking up, entering into those sectors that are likely going to drive the capital market in 2024.
All right.
Then we might also be seeing the fintech industry too, coming up again. So sectors in those areas are likely to be the sectors that are likely to drive the capital market, in addition to the oil and gas sector.
All right.
That we've mentioned.
Early days, but we'll keep tracking to see how it plays out, and I guess another year will go again. We get more outlooks and reviews. Well, thank you so much, Dr. Patrick Ejumede, Head of Research, Sterling Asset Management and Trustees Limited. Happy New Year!
Once again, it's good to see you too.
All right, so we'll take a break now. When we come back, we'll head straight to the markets. That's in a moment. Just stay with us. All right, first trading day of 2025, moving along fast. Let's bring in Willie Bong now with the details. Will, I don't know if you're moving as fast as a trading day, the first one in 2025.
Oh, well, we have to move with the markets. We have to move with the trends. What we are seeing right now, some markets are opening in the green. We saw cocoa prices, as in some other commodities, shooting up. Bitcoin is still not doing badly.
Yeah, Bitcoin starting to rally again for the first trading day.
Yes, so it's good. But for some markets, like the U.S. markets, it's pretty like a mixed, pace for them, just starting off early in the days. I mean, in the morning we saw that rise, but then, just plummeted, and we've seen that dip for the first trading day, early hours, but we'll wait to see the close of business, how they close. We've also seen Asia markets not doing so well.
Right.
First
so
day,
I guess
first day, 2025.
First day we'll see a mixed picture.
Yes.
But some that did really well from 2024 seems they want to continue
that momentum, that rally.
Yeah.
We'll just watch and see how the close of business. That will be the turning point.
That's the decider.
The deciding point for the stock markets, especially for major equities in Africa. They were positive at intraday, smiling, but we'll see how they close. As I said, we saw Nigeria's NGX slightly up 0.05% at intraday. Still had 102,000 points, closed at 102,000 points for 2024. Seeing is still retaining that at intraday. Hope to close it at that. And the GSE in South Africa up 0.27% at intraday. Positive news everywhere. Let's look at Egypt's EGX 30 at intraday. What they do is 0.88%, 30,000. They were the best performing stocks in 2024. We'll see if they continue that rally in 2025. Or maybe Nigeria's NGX probably catch up with them. And then we see the NSE in Kenya closing Tuesday's session in the green, also good for the markets. But let's just look at other parts of the market, especially with Nigeria's currency. We're seeing so many things happening. Let's look at the markets and see how they performed. Basically, we're going to be like other markets. most stocks in the NGX closed out 2024 with record gains. We saw some assets, in the fixed income markets, they were not left out as well. Some asset classes did very well, over 30%. We saw the 2025 budget also having a deficit, it was presented last year of 13.39 trillion naira. But we'll see how that fundraising for that will impact yields in 2025. And let's talk to Chuka Nwachukwu. He's the Group Head, Asset and Liability Management, UBA. Good afternoon, Chuka. It's good to have you on the program.
Good afternoon, Will. Happy New Year.
Happy New Year to you too. Now, some asset classes I was talking about hit about 30% in 2024 for some mutual funds. We saw them in the fixed income space. We do know that the equities market ended with about 37% for the year. But what are your expectations for 2025? Should market players be gearing up for an outperformance, especially now that the FG plans to fund the 13.39 trillion naira budget deficit from the debt market? If we look at the breakdown of that, we see that over 9 billion naira, 9 trillion naira is going to be sourced from 9 trillion is going to be sourced from the debt market, and we also see other plans for bilateral loans and raising from other sources. But what is your expectations for yields, especially now that we have this huge deficit to fund to fill in the gap, and how are market players going to be keying into this?
Thank you, Will. The expectation, like you mentioned, is that the government is going to be funding about 13.9 trillion, from the, 13.39 trillion from the, from the fixed income markets. Throughout last year, the yields were highly elevated, and that is because government funding were mainly from the fixed income market. And of course, the government is looking to, to borrow. Of course, they have to make the yield attractive. And so we do not see that change, especially the first 2 quarters of the year. Government obviously is not getting enough funding from the, from the international market. Though towards the end of last year, they were very successful in terms of raising about $2.5 billion. The market expectation is that we see expected elevated yield, especially as the price stability which the CBN is trying to fight. We see elevated yield. We see that some of the indices that have caused inflation, like the fuel price increment, as well as the food inflation, will continue to play a major role. And so I do not think that the yield curve will change, especially, like I said earlier, the first 2 quarters of this year. So we expect to see the yield slightly elevated between 18.5 to 22.5% on the longer end of the curve. That's the 1 year for the bill. Also, we also have to keep an eye on what government is also trying to do as regards tax, of course, and also improving production, because if the production is improved and then tax is also increased based on what the president is currently trying to do, we see that the pressure will be eased on the revenue from oil, and that will really help us greatly. Another aspect of things that we also have to look at for is the refinery. The refineries, if they are producing in optimal capacity, that will also ease the pressure on the FX side. So we expect to see exchange rate stable, from towards the end of the second quarter of this year, and then the third quarter we expect to see stability at the exchange rate, and of course the yield, will then now continue to climb as expected, starting from the first quarter. Towards the end of the first quarter, and then the last end of the second quarter.
Okay, talking about these projections you've made now, especially stability in yields and possibly elevation in yields, but being stable, and also for the FX market. Let's also consider the inflation target of 15% that the government is proposing in the budget. Do you see this, especially you talked about the refinery coming on board, you talked about production, you talked about the proposed tax reforms, and then that ease on businesses, for businesses. Do you see the 15% target as feasible for the government, for Nigeria, especially with the fact that food inflation is still skyrocketing and production is not as we don't have enough production to be able to match that the impact or the pressure the naira has in terms of chasing the dollar for importation?
Well, 15% from about 33.9% is a tall order, but I personally don't think it's not doable. But then it's going to be very difficult. However, there are some parameters, like I listed earlier, that will greatly affect the inflation figures. What I mean affect it positively. Like I said earlier, if we're able to tackle the oil theft in the Niger Delta and then maintain optimum production, presently we're producing less than 1.5 million barrels per day, which obviously is a far cry from a projected target of 2.2 million barrels. So that will definitely affect. Now with the oil, with the refinery, performing optimally, if everything goes well, that also will help. Because you see, if you look at the drill down to the to the core aspect of inflation, you see that the major culprit there is the food inflation, and then of course the FS inflation. So we need to tackle food inflation. Now, how do you tackle food inflation? We need to produce more. We're not producing more, and then because of insecurity. And so that's why I've always said, and oftentimes that look, our major problem is not solely on the monetary aspect, it's the fiscal aspect. Because if we're able to address the insecurity, especially as affects the farmers, it will help to improve production in terms of farm produce, and then of course food inflation will begin to come down. Then of course on the FX inflation, major concern is the fact that we're still importing oil, and then so if the refinery is addressed, that will obviously reduce pressure on the demand. And so if all these aspects are addressed, which obviously 80% is a fiscal issue, and then we can begin to say, maybe for me, my own projection is probably, if all this addressed, we probably say around 20%, but I think 15% is all.
So looking at 20%, thankfully the president has prioritized security and defense in this proposed budget. We've seen about 4.91 trillion naira allocated for security, and hopefully that will solve the problem of the insecurity in the north. That's the headers clash with the farmers, and we'll probably have our farmers back in the farm to be able to produce, and so we can be domestically secure in terms of food production, and we don't have to look to importing from our neighboring countries. Because just the news that came out, we see that onion prices surged more than 108% just because Nigerians were trying to source from our neighboring countries like Ghana, Cote d'Ivoire, and the rest of them, Benin Republic, just to get onions into the country. So just within 1 year, from 2023, December 2023 and December 2024, we saw that price surge of 108%, and that moved from about 120,000 per bag to about 250,000 naira per bag. That's a huge one, and hopefully we'll see that change in 2025. But with the ballooning debt, our debt profile is about 134. The last data we had from the DMO was about 134 trillion naira. And if we look at the debt capital expenditure versus the recurrence that's in the proposed budget, we see that, slight, not so, it's just a margin of like 14.85 for capital expenditure and 14.12 trillion for the recurrent non-debt expenditure. How do you see the government able to manage this debt profile, especially the fact that we need to generate more revenue? I know they've mentioned the taxes, but what other forms, what other avenues, alternatives can the government look into to be able to manage this and be able to, get projects on board that will generate in the long run, revenue for the country?
Well, I think that the part of the major concern that the DMO is having is the fact that once yield is attractive, it means that government is borrowing at a very high cost, and that's the major concern for DMO. And so they will want to do everything possible to ensure that they reduce the amount of debt that is being serviced through reduction of the yield, as well as trying to make sure that we do not have to borrow, more than we need, So for me, government needs to diversify the economy. We have to look at the non-oil sectors. We have to look at solid minerals, for example. We have to look at the increased production in. We have all what it takes in terms of the climate, good the weather to be able to produce, to be successful in agricultural production. So government has to look at all that, and then of course tourism as well. I mean, for example, Qatar has majorly gas, and then they are doing so well in the economy because they, apart from revenue from gas, they have also diversified into tourism. So we've got a whole lot that we can, as a government, as a people, introduce to be able to diversify our earnings. I appreciate the fact that this current government is obviously trying to do, diversify this. They've introduced some form of guidelines as regards mining, which is very good. But we also need to do more. But in the meantime, while we are trying to diversify, I think that the government should focus more on trying to, to increase production so that we can earn enough and then ease the pressure on the FX. And of course, encourage the private sector initiatives in terms of oil production. The refineries are still not working 100%, but I'm sure that once these refineries work 100%, then we begin to produce at least refine at least what we can utilize here before of earning abroad. So for me, we should address this pressing issue first, and then of course diversification and will go hand in hand with the government projected policy. And if that is done, of course this demand we reduce, and then we start seeing appreciation in naira, and then of course if the inflation of 15% we obviously be met.
Fantastic. So let's look, before I let you go, just one quick question to let you go. Let's go with the rule on the road there. This is the first trading day. What instruments are investors playing at intraday? You share very quickly with us.
So everybody is trying to play safe. Today is the best work day here. So, but what we've seen so far is that a lot of the players are on the treasury bills, especially the 1-year NTP that was auctioned last week, came out around 2.9. 2.8 level. So the major concentration is on that on that bill. For bonds, bond is on the higher side. Of course, people still trying to assess their book, and then hopefully by next week we start seeing activities on the fixed income. But presently, T-bills is what is active for today.
Okay, Treasury bills active in the minds of investors. Thank you so much, Chuka Nwachukwu, Group Head, Asset and Liability Management, TVA, for sharing your thoughts on Business Incorporated. So let's turn our attention now to other markets. Middle East, especially most major stock markets, were mixed at intraday. We see Dubai down 0.22%. Abu Dhabi also down at intraday 0.8%. Let's look at how Saudi, that's the Tadawul and Qatari indexes, fared at intraday. They were in the green, 0.08% for the Tadawul, that's in Saudi Arabia. And then we have this Qatari index, up 0.8%. So that's not bad for the markets. But let's look at Asia markets now, how they did at the close of business today. We saw them in the red, with China leading losses as trading resumed after the New Year's break. Japan markets are closed for a bank holiday today, so we're not going to be getting the numbers for today. But this was the close for Tuesday, 0.96%. Now let's look at other markets there. We see Kospi in South Korea down 0.023%, closing at 2,398 points. The Hang Seng in China, let's see how they performed. Not so great, deeply in the red, 2.18%. If we're looking at China's market there, it's really a lot coming, especially at their PMI numbers came in lower than expected, so that's not great. So we're looking at other markets. Let's look quickly at Shanghai. The mainland Chinese markets also down in the red, 2.66%. Forgive me there, too much coffee this morning, 3,262. And then we have the Nifty, the only outlier in that region, up 1.72%. Not bad for the first trading day close for 2025. Let's look at stock futures futures in the US in early trade, it began, it fell. Let's see, red, 0.07% for the Dow Jones futures. S&P futures also down 0.43%, and the Nasdaq futures dipped as well, 0.9%. Although stocks fell in late 2024, the year, saw strong returns. That we must give it. The S&P 500 was up 23% in the US. The Dow Jones nearly 13%, and the Nasdaq also rose about 29%. And this was driven by AI and interest rate cuts. We're hoping to see if the Fed will give more cuts in 2025, but not hold your breath. We also saw big gains from Nvidia and Apple. They led the market. Profit taking in late December did cause a 4-day decline for the S&P though, and that's the first since 1966. Santa Claus rally is unlikely. It didn't happen last year. We don't think it's going to happen this year. Volatility in the markets. Investors are going to be watching the New Orleans attack and looking for a weekly jobless claims data later this week. So all that's going to shape the market and shape sentiment for, investors. So Ladi, we see the AI doing their thing. Right. We're just hoping we tap into the market. I know you have one thing with Elon Musk.
Well, yeah, Elon is back at this point, making moves in 2025. But we'll get all that at the end of close today. That's
yes.
What the markets, which one is moving ahead.
Nvidia is leading that path, though. So let's just, investors could jump in on Nvidia right now.
All right, thank you so much, Will. All right, let's get a check on what's playing out in Europe. Ever since Russia started its war in Ukraine, European Union countries have turned off Russian gas. At least most of them. Some still receive deliveries, but that has now come to an end. Well, let's talk to Lars Holter now with DW. Great to have you, Lars. So what's the latest?
Thanks for having me, Ladi. The big change came with the new year. It's been clear for a while that with the end of 2024, long-running transit contracts between Russia's state-owned gas giant Gazprom and Ukraine would be running out. And it's also been pretty clear that Ukraine wasn't about to renew them. So in the early morning hours of New Year's Day, the gas transit pipeline that used to deliver Siberian gas through the entire country of Ukraine and delivered it to Slovakia and Hungary, that ran dry. News agencies showing pictures of gauges along the route that had literally dropped to show a pressure of 0. And Ukrainian authorities also published logs that showed that there was no transit of gas. Now, none of this, I should say, was surprising. Ukrainian President Volodymyr Zelensky had recently talked about what was to come when he joined an EU meeting in Brussels. And back then he made it clear that, and I want to quote him, we will not continue the transit of Russian gas. We will not give them the opportunity to earn additional billions on our blood.
All right, but with most of Europe cutting off gas deliveries for Russia, how much gas was actually still going, through these pipelines?
Well, it was, of course, much less than what they used to send. For 2024, transit totaled around less than 14 billion cubic meters. Now, that's nothing compared to historic numbers. At their peak in 2018-2019, annual flows to the European region reached up to 180 billion cubic meters. And even in 2022, deliveries were around 64, and then in 2023, still 28 billion cubic meters. Now, those numbers show that cutting transit through Ukraine will be costly for both sides. In fact, in pre-war years, Ukraine received several $billions a year from transit. And even in 2024, those old standing contracts with Gazprom netted the country about $800 million. And that's money Ukraine won't receive any longer in a situation now of war, where the country is desperate to fight off the Russian aggressor. That is obviously painful. However, financial losses are much higher on the Russian side. Moscow will lose out on around $5 billion worth of gas sales, and those are just the 2024 numbers. Historically, Moscow raked in tens of billions through gas sales transiting through Ukraine.
All right, first trading day of 2025. What investors looking at in Europe?
Well, we saw weakness in stocks in those last few days of 2024, and now investors would like to start the new year with a bang. For the DAX in Frankfurt at 19,909 points at the end of the year. That obviously means they'd like to see the index break through over 20,000 again. But all these round numbers are just, well, numbers. 20,000 actually means nothing. It's, after all, about fundamentals of the market. And those are tricky right now. China is weak, and that's partially because we're a few weeks out of Donald Trump becoming president of the United States again. We're expecting trade issues between the US and China, but also likely the EU. So there's a lot of uncertainty in markets, and I'm afraid this won't change for the next couple of weeks now.
All right, I guess it's a wait and see. Thank you so much, Lars.
Thank you, Ladi.
All right, so other stories now. The Egyptian government, through the Central Bank of Egypt, is offering a substantial 80 billion Egyptian pounds in treasury bills today. This auction is conducted in collaboration with the Ministry of Finance and features 2 tranches with varying maturities. All right, let's head to the commodities market now. See pepper as a staple ingredient in Nigerian cuisine. We've seen the price seen a dramatic fluctuation in recent months after a staggering 1,566% price surge in March 2024. Our sea pepper prices have recently witnessed a sharp decline. The volatility has raised concern about the stability of pepper production and its impact on food inflation in Nigeria. Let's talk to Teva Kumeka now, is a manager at a financial derivatives company. Great to have you, Teva. Happy New Year. What factors are driving the recent price volatility in the Nigerian pepper market?
Yeah, good afternoon, Ladi. Happy New Year. Thank you for having me. Yeah, the agricultural sector is affected by so many things, so pepper also is not an exception. We've seen issues of seasonality affecting the price of pepper and other products. For example, the price you reported in March, that was an off-season price where pepper got to 250,000 naira per 50 kg bag. And we also see fluctuations in productivity, then the issue of exchange rates. What happened, why the exchange rate affects the price of pepper? You know, by around March, the naira to dollar was around 1,900 naira. Then farmers saw an opportunity to export whatever they were producing to neighboring countries. So there was shortage of supply in the country, so the price went up. Then after that, there was stability in the dollar. You've seen that dollar move from 1.9 to around 1,500 in December. So there was stability, then the price of pepper reduces. There's this concept we call in economics the Colbert theory of business cycle, where as prices increase, there's tendency for supply to increase, and as the price falls, then there's tendency for supply to come down. So what we are seeing now is that when people saw opportunity to produce more of the pepper, there was increase in supply. But as the supply increases, demand will not meet up to supply. So that's why we're seeing this sharp drop in the price of pepper recently.
All right, so, given the challenges of insecurity, inadequate infrastructure and post-harvest losses in, most of these key pepper producing regions, what strategies can be implemented to, stabilize production in Nigeria and ensure more, consistent supply?
Insecurity has been a major issue in Nigeria, especially in the agricultural sector. We had issues of farmer-header clashes and stuff like that. So this affected planting and harvesting. Those that could not go to farm could not plant. Those that were managed to plant were not able to harvest these products. So this caused increase in post-harvest losses. And we have challenges of transporting whatever was produced and storage. So this leads to decreased productivity and stuff like that. But an offshoot of these insecurity issues that are affecting farmers is what we call the rural-urban migration. Farmers are now running away from their farmlands, moving to the urban centers, which in the long run will lead to social unrest and other pressure on the little facilities that are available in the urban centers. So insecurity has been a major issue, and until that is addressed, we'll go back to what I mentioned earlier as the cobweb theory of business cycle. We'll keep going around the cycle, season after season, but until we stabilize some of these things and introduce policies that will stabilize the agricultural sector, where pepper and other produce will be able to be stabilized throughout the year. Then, so that we reduce this volatility, we'll continue to see these prices going up and down as we move through the seasons.
All right, we'll keep tracking those prices. Hopefully, consumers get some kind of break, when it comes to inflation in 2025. Thank you so much, Teva.
Thank you very much for having me.
All right, let's get a check on other stories. Now we'll see the Ghana Stock Exchange concluded 2024 with a remarkable performance, achieving 56.17% return. This marks the highest annual return since 2013, when the market witnessed a significant 78.81% surge. Our financial sector also experienced a strong rebound, delivering a 25.2% return after a challenging 2023 that saw a 7.36% decline. All right, let's get a check on the crypto market now. Seems to be kicking off 2025 quite strong and green. If you look at Bitcoin, they're up about 3.21%. XRP, a big move, about 13% up. So the market is starting off on a strong footing. That's the crypto market today for the first trading day of 2025. Let's get the top headlines now in the market. We see Elon Musk has returned to his original X avatar after changing it. He made waves in the market as he changed his avatar on social platform X. The change sent the Solana-based meme coin as Caicus Maximus into a downward spiral that the coin sank about 90% after surging when he changed his avatar to that icon. So I guess Elon stepping into the crypto market again strong in 2025. So other matters now, see December recorded the lowest crypto hacks in 2024. The crypto industry got over 25 hacks, resulting in about $24.69 million in losses, a 71% decline compared to November, and that's according to a blockchain security firm called PeckShield. So those are the top stories there in the crypto market. And talking about hacks in the digital currency industry, the Nigerian crypto exchange, Patricia, has been dealing with a security breach that has affected its customers' funds. In April 2023, Patricia announced that it had been a victim of a security breach that costed about $2 million worth of customers' assets. Let's get an update on what's happening now. Joining us is Hanu Fejiro Agboje. He's the CEO of Patricia. Great to have you on the show. Happy New Year.
Happy New Year, and great to be here.
All right, so a lot happened in 2024. That's for the crypto market. Coming from 2023, for the sake of those who are not familiar with Patricia Technologies as the hack in 2023, tell us, take our minds back to what really happened and how, customers were affected.
Yeah, wonderful. Well, thank you for having me here, and Happy New Year to everybody. Patricia is the premier crypto exchange in Nigeria. We started in 2017, and we're the first to introduce crypto and make it mainstream in Nigeria. Unfortunately, a while ago, we were victims of a hack where we lost substantial sums of money. And it was a very difficult period for our customers. It was a difficult period for the team, and since then we've been working on it, with the help of the government. We've been introducing new ideas. At Patricia, I like to say that we are pregnant with vision, and we've been able to manage the situation since 2023 up to now. Back in the day, we gave our customers a timeline with which we were going to refund the funds 100% to every customer, regardless of how it went with law enforcement or recoveries, because we know that could be a dicey subject. We believe so much in the crypto industry in Africa and in Nigeria, and we believe that opportunities are always available, and we will be able to make back what we have lost in the past. And over the couple of months that have passed, we've been able to keep our words. In December last year, we made out some payments to customers, and just in 2024 as well, we also made out some substantial amounts of funds again to customers, just keeping to our original commitment to our customers to see everybody refunded.
looking back at, when the exchange got hacked, would you say your security was top notch at that time, or the hackers were just able to outsmart your platform? And what has been the response and reaction in the aftermath of that security breach?
Yeah, so I would say we had very good security at the time. The thing with risk is the biggest risk is not conceived. So we had very good security at the time, but definitely there were some loopholes in our system that they were able to take, that they were able to exploit, also with some insiders as well. So it was more so of a human factor as opposed to a technological error, as it may be. And since then and now, we have shored up our security, and our customers are very happy with the service they've been receiving from us.
All right, on the matter of recovery, of funds, arrested culprits.
Yeah, so the justice system takes time. We have the suspects, and we are working towards forfeiture of assets related to the loss. The case is still in court, and we are still working on it. It's moving, but it's moving slow. But again, I want to appreciate the law enforcement agencies for doing their best on the matter.
All right. Do you think Nigerian crypto exchanges will be able to protect their platforms from hacks going into 2025?
Yeah, I mean, customer trust is the biggest thing in our industry. Just considering the amount of fake news, the amount of of just the fear that surrounds crypto as a asset class. So security is top notch, and I would urge everybody in the industry to invest a lot of money, spend a lot of time in it. The thing about security is you can do your best, but there will still be loopholes because people are always building every day. Even the biggest companies in the world experience this security breach. So it's really about creating like a reserve fund. So in the case of an unforeseen circumstance, you have assets to reimburse customers, ensuring that you have top-notch security. You go through security audits frequently to ensure that the platform is top-notch.
I guess at some point, maybe crypto platforms will have some kind of, insurance going forward. But let's talk about the industry now. There's been a big, resurgence in, conversations around Bitcoin, Web3 currencies. What do you know about, what's playing out now, and what are your projections for 2025?
So in 2024, I gave out some predictions around the ETF becoming a thing, around Bitcoin hitting a $2 trillion market cap, about 10 predictions, and all of them came through. So in 2025, I really see the market maturing on a more global scene. With Donald Trump coming back into power, we are going to see a more pro-crypto America, which would in turn lead to a more pro-crypto world. I see the first Bitcoin reserve in America being launched, and I also see Nigeria leading that aspect as well, because Nigeria put out legislation for crypto just last year, and that was really fantastic. So this year, what we need to do is take it a little bit further, and set up a Bitcoin reserve for Nigeria as a country. Just the same way we have gold reserves, the same way we have a dollar reserve, we need to now have a Bitcoin reserve, because the future is going to be digital. The future is going to be run by countries who own and controls this asset class. It's going to unlock prosperity. It's going to be the biggest breakthrough nations will see in this coming decade. El Salvador is doing it. Some states in America are already doing it as well. I think that if I was to give one prediction on a governmental level, that is where I want to see Nigeria go to. But on a more retail side, Bitcoin is going to the moon. I foresee Bitcoin hitting $180,000 by the end of the year, or at a minimum. Solana, it's a bull year for crypto, and it's going to be the best time to hold crypto as an investor.
All right, definitely early days. We'll see if most of these projections play out. But thank you so much. That was Hanu Efejiro Agboje, the CEO of Patricia. Thank you for coming on today and explaining what played out and what to expect. Thank you, and Happy New Year.
Thank you very much.
All right, so that's how the first trading day of 2025, that's how most of the markets are playing. We'll give you a close for the local boss. That's for later on the news at 10. But thank you so much for sharing 2024 with us and starting 2025. I'm Ladi Williams. Bye for now.